This is Black Money.
About economic liberation and freedom.
Critical conversations to invigorate our communities through Black-led CDFIs.
But most importantly, we want people to create wealth.
When we look at our communities, we still see a big disinvestment.
Going from resourceful to resourced.
CDFIs have that high touch. They understand their customers. They know how to reach out to those customers. They stay in touch with those customers.
We are trying to create job makers and not just job takers.
Yeah, I've even heard it said recently that great leaders don't lead from the top down, they lead from the bottom up because they're actually lifting everybody.
We have to do more than just being a regular lender.
Don't give me this story about if I teach you how to fish. Give me some money.
Yes. Happy Tuesday, LinkedIn community. So excited to be here with you. I'm Justin Minott at the African American Alliance of CDFI CEOs. And my special guest today is Mark J. Robertson, Senior, the President and CEO of PCR Business Finance. So excited to have you here, Mark.
Well, thank you, Justin, and good morning.
Good morning. Now, you know we love story, and I know that you've been on an incredible journey that has led you to this point in the work that you're doing. Walk us through how you ended up here. Give us that backstory.
Well, Justin, I don't know how much time you have, but
we got time, brother.
Okay. It has been now a 49-year journey for me in financial services. It started literally 2 weeks after I graduated from high school in 1975, where I was part of a youth job opportunity program for that summer, where I was hired in retail banking and spent that summer as a teller and new accounts counselor is what they used to call them back then. And did that for the entire summer, continued on with that through college. UCLA Economics 1980, by the way, for any Trojans on the line. Spent the first 5 years of my career in retail banking. Upon graduation from UCLA, was hired by Union Bank, which is now part of US Bank, in their commercial credit training program. After spending 2 years on that program, they placed me in their commercial leasing department, leasing equipment, even had a 747 out on lease. From there, I went to what was called the middle market lending group, lending to businesses with revenues anywhere from $5 to $50 million. Did that for a total of 6 years at Union Bank, and then wanted to get into real estate lending. So made a move to Security Pacific Bank, where I was part of their real estate industries group, became a vice president and team leader there, lending to very large real estate developers. 3 years with Security Pacific, then moved on to Bank of California, which later became part of Union Bank. It's really something how those mergers impact one another.
Sure.
But Bank of California, also in real estate industries. And while with Bank of California, I became a volunteer at PCR Business Finance on the loan committee. And in December of 1991, a program management position opened up at PCR. And that was on their bond guarantee program for small contractors that needed to get surety bonding. We would provide guarantees to the sureties so that those contractors could get the bonding that they needed. So I did that. I went to PCR in December of 1991. 4 months later, the chief credit officer position opened up. I was promoted to that. Right at the start of the Los Angeles civil disturbance, or the riots, as some people call them. That was April of 92. Stayed as chief credit officer for 10 years and was promoted to president and CEO in July of 2002. And so I've been in that role now for the last 22 years, almost 22 years in July.
Incredible. What a journey. I'm very curious now. You had this opportunity as a youth, this seed that was planted, and now you are sitting here as the president and CEO of a very impactful CDFI. When you were a youth, what did you see yourself? How did you see yourself being involved in this industry? Did you see yourself at all to be able to fast forward and look at where you are now? Talk about that perspective.
No, I did not. It's kind of hard to envision at 18 years old where you're going to end up. I just knew that in banking at that time, I was doing something that was consistent with my major in school. I majored in economics, and that was very, I think, commensurate with what I was studying. So I had access to the financial markets, people that knew the financial markets. And so I was exposed to that at a very early age. I will say that at one point along the way, I remember a young lady did prophesy that I would one day be president of a bank. And so community development financial institutions are, for all intents and purposes, non-depository banks, and so here I am. I accept that prophecy, and I'm thankful to be living it out.
Yes, and we are too. I mean, you're making such a big difference in our communities. Love that you're in this spot. What about the financial industry drew you? Like, why economics? Why finances specifically? And what about it really stokes your passion?
Well, a couple things. I've always been fairly math inclined. You asked about economics, and probably 80% of economics is calculus. And so that piqued my interest towards that particular major. With regards to business, I was really originally interested in business, but UCLA at the time closed down its undergrad business major, and so economics was the closest thing to that. And so, and then finally, or ultimately, I wanted to know how money flows. I wanted to understand how people make money. Even as a teller, I noticed small kids, and mind you, I grew up in a household with a single parent. My mother raised 5 kids on her own. And so needless to say, I didn't have very much money to save. But as a teller, I noticed small kids coming up with their savings account passbooks with thousands of dollars in them, making deposits and making withdrawals, or just updating their passbooks to see how much interest they've earned. And so that truly piqued my interest as to how to build wealth, how to gather wealth, and how to ultimately one day leave something here for my posterity.
Yes, I love that you followed these curiosities, right? And I just want our listeners to pay attention to this, right? It started off as, hey, I like math. This feels pretty good. All of a sudden now to leading, one thing leads to the other, and you were the president and CEO of PCR Business Finance. I want to take this time to who is here with us in the digital building on LinkedIn. Hop in the chat. Let us know in the comments. We love doing this live with you all. So who is here live with us? Now, okay, from now the financial industry, why CDFI? What drew you initially to volunteer at PCR? And then what kept you in that space? Because you could have stayed in, traditional banking.
Well, I tell you, traditional banking was an excellent training ground for me. And mind you, I was advancing on the corporate ladder, I guess, as one would expect a young person to do with a degree from a relatively prominent university. So that was not the issue. However, there was always the issue of feeling like being the only one. And there's always some attempt to tamp down creativity, to tamp down individual thought. And so I kept running into that particular wall in the corporate marketplace. And so becoming a volunteer at PCR was an opportunity for me to literally relax, exhale, and get away from it all for a couple of hours a month and help that organization approve transactions that were truly impactful, making an impact in people's lives, making dreams come true, helping businesses to succeed, and making a difference, as I say, in people's lives. And so when the opportunity came, at the time, it was 1991, real estate was in the tank. Some may not remember it, but we were living through, in the late 80s, early 90s, we lived through some really high interest rates, really devastating real estate negative impacts. And so it was an opportune time for me to make that move to PCR and begin to take what I had learned in banking and use it for the benefit of my community.
Yes. Now, what about the CDFI industry now still calls you? I mean, you are just as passionate, it sounds like, as you've ever been. Your fire is burning just as hot. So what about this industry? What about the work that you're doing really resonates for you to this day?
Well, the work that we do, and not just PCR, but the entire CDFI space, I guess there are maybe 1,200 or so around the country doing fantastic work where no one else will go. I was told, and mind you, not all CDFIs are not for profit, but I was told that one time, gentleman leading a class, that the hard work is left to nonprofits. And so it's we who will go into communities and see a vision for affordable housing. It's we who will go into communities or interview a business owner who no one else would give him or her a chance. It's we who will sit across from the table at a $25,000 loan closing where the borrower literally breaks into tears because no one would take a chance on her seamstress business. So it's that kind of a life-changing work that attracts me to the CDFI industry. And mind you, when I was in banking, I was working on transactions that were literally hundreds of millions of dollars, housing tracts of 3,000 units. I worked on some of the skyscrapers in downtown Los Angeles, and these were extremely large transactions. But the only time I would hear from the borrower is when they were pounding on me for a lower interest rate or a lower fee, or something's not right with the transaction. The work that we do now, the borrowers recognize that they have nowhere else to turn. They recognize that you're in the fight with them, and they recognize that you're there to help. And so that's what attracts me to the work that CDFIs do.
Brilliantly said. Want to give a shout out, Fran Westcott, one of my good friends. Good to have you here in this digital space with us today. Let us know who else is in the space. I love how you said these pieces about being in it with the business owner. Let's use this opportunity to talk about what PCR Business Finance does and really leans into, because you have a very unique space in the market. So talk about that piece.
Absolutely. We are, as a CDFI, not just a CDFI loan fund, but PCR has the very unique situation of also being a small business development center in partnership with the United States Small Business Administration. So as an SBDC, we can sit with clients and advise, counsel, coach, listen to whatever issues they happen to be going through, and support them as far as we can. And so to that extent, we are what I would call a one-stop. For businesses, again, that have nowhere else to turn. They can come to PCR for advice, whether it's one-on-one or in a webinar or a classroom setting. They can come to PCR and get the answers that they need. And so we are in it with them. And once the SBDC is done with them, if they qualify or if they're seeking financing, they can walk across the hall and talk with one of our loan officers and seek financing. So we try to be a one-stop for anything that a small business might need.
Yes. Now, why small business? Like, what is the opportunity for impact? You're investing in these businesses through, the technical assistance, the resources, and also the financing. That's a lot of energy put in. Why?
Because number one, people shun, other financial institutions shun small business. It's not as sexy, it's not as profitable. There's a lot of hand-holding necessary. So the cost of working with small businesses might be prohibitive. But that's where the jobs are with small businesses. And so as goes our small businesses, then so goes employment rates, and so goes the economy as a whole. So if we don't prop up small businesses as a foundation of this economy, then we all err drastically.
Yes, I agree. I mean, you're preaching to the choir on that one. That is well said. Now, here's what I want to know. What is an example of a story that reminds you of why you do what you do, right? So like there are hard days. It can be tough in this work, especially this impact-centered work. Is there an example of a business owner, a client of PCRs that you're like, man, when I have a hard day, I got to remember this impact and this feeling?
Sure. Well, I alluded earlier to a seamstress that I came across some time ago, who came to us for a $25,000 loan, and we approved that loan. And she literally broke down in tears in the closing.
Wow!
Because no one else would take a chance on her. That was an opportunity for her to really kickstart her business and take it to the next level. There's another one that comes to mind, is a child care center in Watts, where a mother was taking her daughter there. And in fact, I believe she was a student there herself as a child. The owner was ready to retire, did not have family that was willing to or interested in taking the business on. And so this mother herself put together the resources, including help from PCR, to buy that facility. And while her daughter was a student there, and she continues to operate it today. And so those are the kinds of stories, kinds of impact. Those are the reasons why we get up in the morning and do the work that we do. It is truly gratifying, is the word, to be able to carry on what I consider a ministry. And yes. So for people of faith, they'll understand what I mean by that.
Of course. Now, I want to go in an interesting piece here, and let's talk about entrepreneurship by acquisition that you were talking about. Okay, this woman acquired the businesses and able to move it forward. I feel like there's going to be a lot more of that opportunity now with people aging out of their business or retiring, coming up and have nobody to pass it on to. What is the opportunity in that space uniquely? Because I feel like our economy right now, there's a gap there that is becoming larger by the day. So what do you see in that?
Absolutely. There are going to be more and more people of particularly the baby boom generation, my generation, who are maybe looking to retire and looking to pass on the business, may or may not have family members interested, children interested in taking on the business. And so they will either look to sell it in the open market, or preferably there's opportunities for employees, longtime employees that have been with them to take over the business. And so that is I think going to be a big opportunity for CDFIs to help finance those types of transactions. In fact, PCR only recently received a nice grant from Wells Fargo. Thank you, Wells Fargo, to support that particular activity, which would be employee ownership of small businesses. And so I think there's going to be, particularly, again, it's a generational thing. People in their mid 60s, late 60s, ready to retire. Those businesses, rather than close them down, rather than lose the impact from the jobs that they carry, how do they pass them on? And I think CDFIs are the perfect vehicle to help with that work.
Good point. Really good point. So talk about some of the unique initiatives that you have going on at PCR Business Finance. I know you have a loan guarantee program. Talk about that and other unique pieces that you bring to the table.
Okay, yeah, there are actually a couple things. You mentioned the loan guarantee program. That is the state of California loan guarantee program. And besides PCR as a CDFI being a direct lender, we are also a lending intermediary. In other words, lenders, whether it's a bank, credit union, or CDFI, lenders who want to expand into small business lending can come to PCR and get what's called the State of California Small Business Loan Guarantee. And so, and that is very, very similar to the SBA 7A program, where lenders in California can come to us and get a guarantee of 80% of a loan or up to $5 million. And there's no minimum loan size. So that program has been around since 1968. And so we at PCR, even ourselves, if we're not going to do a loan on 7A, on the Community Advantage program, we will seek out a state of California guarantee to support our own activity. So we really don't make any loan without some sort of credit enhancement, some sort of credit support in that way. And so that is one thing that makes PCR unique as a CDFI. We're also what's called a state certified financial development corporation, administering the state loan guarantee program. And so even as lenders gear up with climate tech financing, as those EPA funds begin to flow, some $27 billion or so that was recently awarded, to the extent that lenders will be working in California, making those loans, PCR stands ready to help support and preserve that capital with the state of California loan guarantee. Now, I will say one other thing that makes us unique. We are the only CDFI SBDC combination in Los Angeles County. And so there's one thing that our SBDC has been doing, and this we were able to pioneer this with a grant from through AAA. So thank you, AAA, for helping us to start what we call the Sister Entrepreneur Loan Fund, SELF for short. I believe it was 2021 when we received our first grant through AAA, supported by US Bank. and that allowed us to start SELF. It is a cohort based training program. We typically have made, and SELF, as I mentioned, Sister Entrepreneur, it's geared toward Black women entrepreneurs solely. And it's usually a cohort of 25 women who are selected. It's usually oversubscribed, who are selected from maybe 120 applicants. And so they go through a 6-month intensive training, primarily geared towards record keeping and understanding their numbers, balance sheet, income statement. Am I making a profit in the hard work that I'm doing? And after they finish the 6 months, then we provide them with a technology improvement grant. Those typically range anywhere from $2,500 to $4,000. And so they can take those grants and maybe buy new laptops, maybe a new point of sale system, anything to enhance their internal technology expertise. And one other thing too that makes us, I think, unique, Justin, is for the last 9 years, PCR has been administering the Metro Business Interruption Fund. And that's the Metropolitan Transportation Authority here in Los Angeles County. And they are enhancing, rebuilding really the transportation infrastructure in Los Angeles County. And that work has been going on now for some 40 years. And for the last 9 years, we've been administering the Business Interruption Fund. And so what happens is, as they build out those rail construction projects along the various routes, they disrupt the businesses that are located along those routes.
Sure.
And so what we can do with what we call the BIF, Business Interruption Fund, we can give those businesses a grant of up to $50,000 per impact year. Doesn't matter whether they're profitable or not. All we want to see is impact on their top line revenues.
Yeah.
And we can replace those lost revenues caused by Metro improvements. And so what's coming now with that particular program, as I mentioned, we've had it for 9 years. We've given out some $41 million to 460 some odd businesses across 3 different rail construction projects. We've just been awarded an extension of that contract for the next 5 years.
Congrats.
Thank you. And that was an $8.1 million procurement. I'm sorry, $8.5 million procurement for the next 5 years. And our first project out of the gate will be in what's called the East San Fernando Valley. That will be a 9-mile stretch of light rail construction, all at grade along a major boulevard. And so, as I say, we've helped some 460 businesses over the last 9 years. With this one project, there will be some 2,700 businesses potentially impacted by that construction. So our Business Interruption Fund crew is about to get really busy.
That's incredible work. That is incredible. Well, we're so proud of what you're doing. I want to spend a few minutes here because you've been so deep in this space for such a long time, talking to the business owners now, the entrepreneurs on the ground doing this work. What are some of the pieces of advice that, if you're like, man, if I got this question again, or if I, could just give this one piece to some business owners who are starting out or who are on their journey, what are some of the core things that you see over and over that you would love for entrepreneurs to know?
Well, probably the most important would be record keeping. We noticed in 9 years of administering the Business Interruption Fund, doing direct lending since 1994, we've been doing direct lending as a result of the Northridge earthquake. And then now with the SBDC and through COVID, what we found to be consistent across the board is a lack of record keeping. And even, let alone applying for or qualifying for a loan, even applying for a grant, free money, we find that many of our businesses do not have adequate records to support a grant request. And so we have doubled down on record keeping. We've doubled down, as I mentioned, with the SELF program on knowing their numbers. I've gone to graduation of the SELF cohort. In fact, we're getting ready to graduate cohort number 3.
Wow.
And some of the stories of the women that have gone through that training are really touching, and to the point where there was one who described her relationship with her numbers, that she dates her numbers every night now. Absolutely. And so that's where we need businesses to be, is to understand, you're not in business as a hobby. You're in business to make money, first and foremost. And if you're not, then there's something wrong. And so those would be 2 things that I would really stress for any business. Number 1, are your records in order? Are you filing your taxes? And number 2 is, are you making money?
Yes.
So
we do have a question from the chat. What types of records? Financial records. What else when you say are your records in order?
Absolutely. Financial records. Do you have tax returns? Do you have financial statements? Those types of things. And so if you don't, do you have the input that would allow you to prepare them in a quick manner to get them together? Or do you have someone on your team who can maybe help in that particular area? So financial records primarily.
Okay, thank you.
We've run into businesses that haven't filed taxes in years, and it only hurts them in the long run. So, yeah.
Right, especially when it comes time to be financeable, even grantable, from what you're saying. I think that makes a massive difference. And keep the questions coming in the chat if you all have them. I definitely have a few, while I have this wisdom right in front of me right here. I want to talk now about this current interest rate environment. Something you said earlier in the interview really piqued my interest about this other interest rate environment that you lived through and were in the financial industry through, that there was some kind of housing bubbles as well happening at the same time. What do you see about this current environment? Where do we sit? What are you seeing from your perspective?
Well, certainly the interest rates that we or any other lender will charge are a function of risk in a perceived transaction, but even more so, they're a function of our cost of funds. In other words, more often than not, we have to go out into the marketplace and borrow money from financial institutions primarily. And to the extent that we can get those funds at a lower cost, then we will most of the time pass on those cost savings to our borrowers. Even better yet, to the extent we can identify funds that are no cost, then we will certainly pass that savings on to our borrowers. And you mentioned why CDFI, being a CDFI, qualifies an organization to qualify for financial assistance through the United States Treasury CDFI fund. And again, those represent major grants awarded to CDFIs, and the CDFIs will then pass on the fact that they have zero cost funds. More often than not, they will pass on that savings to their borrowers. borrowers. That's the whole point, is to not just get the financing to the small businesses, but get the financing to them at a reasonable cost. And I think most CDFIs will work to that end. Most of the time, I think that we're successful in lending to borrowers at market and more often than not below market rates.
Yes. Okay, that makes a lot of sense. Now, I want to close out with a few things. One, first, is where is PCR heading? What does the future look like for PCR Business Finance?
Well, the future looks bright for PCR, Justin. I have to say, we are going through our own growing pains right now. And so, and I will say too, we've been a member of AAA since its inception. And just by hanging around the powerful people, the powerful members of AAA's leadership, our company has tripled in size since our membership.
Wow.
And I mean that it's not that we're a large CDFI, but when we joined, and I don't mind sharing, we were a $10 million organization in total assets. We are now approaching $30 million.
Wow.
And so, and that is tribute to the wonderful team that we've been able to assemble at our organization, but also tribute to, as I say, to the benefits of belonging to AAA, hanging around people that think big, that refuse to take no for an answer, and people that are going places. And so that has rubbed off on PCR. So where we are now is trying to manage that growth properly. So we've got 40 team members now. I mentioned the new procurement on our business interruption fund. Our SBDC went from pre-COVID serving maybe 700 clients a year. They're right at about 2,000 clients a year now. Our lending team has tripled our loan portfolio size. And mind you, we're not a big CDFI, but we're approaching a $20 million loan portfolio. So we are poised for growth. Our balance sheet is strong. If one were to look at us financially, one would see a well-capitalized organization. One, however, that is under-loaned. In other words, we've got a lot of loans that we can put on the books. And so over the next 3 years, we'll be looking to scale our operation. We want to be at least a $50 million organization over the next 3 years. And so we've got the financial wherewithal to do it. We've got the expertise to do it. However, we are trying to identify some new members on our lending team to help expand there. So we're excited about the future. I will say too, another benefit of having joined AAA is that AAA shares its relationships with its financial partners, one of which is U.S. Bank. And so with some financing from U.S. Bank, we were able to acquire a building in the Crenshaw district. We will be developing what we call a community business center. It will be not only PCR's corporate headquarters, but it will have some shared workspace for small businesses. It will have some community convening space, about 700-800 square feet of community convening space, so that we can gather as a group and discuss things relevant to small business or anything that's relevant to our community. And so that is on the horizon. We are in the process of letting contracts now. We hope to get bids from at least 3 good contractors to begin construction on that project. It's a complete renovation project. that will take probably a year to complete. We hope to be under construction by mid-July. And so we will have a brand new shiny place in the Crenshaw district, serving not only Crenshaw, but Hyde Park and Inglewood. And that will supplement the work that we're doing right now in the city of Compton as well. So these are a few things that are on the horizon.
Wow.
We're excited about the future. And I can't thank you enough, Justin, for allowing me to share.
Oh man, this has been brilliant. We do have one question before we wrap up here from Marvin. Do you lend in the construction industry?
We do lend to contractors, yes. Pretty much providing working capital lines. It's not our expertise, but if there's an overriding reason for us to be involved, then we will support small contractors, yes. We would prefer, however, if that contractor had a bank lender who is more adept at doing lines of credit, we would prefer to support that with a loan guarantee, but we will support it one way or another.
Brilliant. Brilliant. Well, thank you so much, Mark. You are brilliant and wise, and your passion shows through in everything you do. So thank you for your time here today.
Well, thank you, Justin. Thanks for having me. And thanks for your diligence in making sure that I did this.
I wasn't letting you get out of here. And it's, one, we want to showcase what you're doing. And two, people need to hear your perspective and what you're talking about. I feel like this is so impactful because of what you do and who you are. So thank you for that. And I got to give thanks to all of our LinkedIn Live listeners. Thanks for tuning in today. You could have been anywhere else, but you chose to be here with us. My one ask of you all is to share this interview with your network so that we can multiply the impact of even this interview. Mark's vision, Mark's wisdom needs to be in front of more people. He needs access to more capital to do more of the work that he's doing. So please share this. You never know who can see it and what that might lead to. So thank you all for that. Anything else?
No, thank you,
Justin. We've done it. Okay, let's land the plane then. Bye, y'all. See you again next week. This is Black Money.
About economic liberation and freedom.
Critical conversations to invigorate our communities through Black-led CDFIs.
But most importantly, we want people to create wealth.
When we look at our communities, we still see a big disinvestment.
Going from resourceful to resourced.
CDFIs have that high touch. They understand their customers. They know how to reach out to those customers. They stay in touch with those customers.
We are trying to create job makers and not just job takers.
Yeah, I've even heard it said recently that great leaders don't lead from the top down, they lead from the bottom up because they're actually lifting everybody.
We have to do more than just being a regular lender.
Don't give me this story about if I teach you how to fish. Give me some money.